Welcome to the deep dive. Today, we're going to tackle a question that many of you might be asking. What's the real story behind Yum brand stock?
Right.
You know them KFC, Taco Bell, Pizza Hut, the Habit Burger Grill. We've looked through the latest stock analysis, earnings calls, news, all that stuff.
Yeah.
Trying to bring you a focused breakdown of what you really need to know right now.
Exactly. And our mission here is, well, to cut through the noise, the jargon, and just give you a clear picture of where Yum Brands is, financially, and maybe where it's heading.
Okay, let's jump straight into the numbers then. As of May 23rd, 2025, the stock closed around $145.45. Interestingly, one report we saw put its fair value just under that at $144.15, with their price target slightly higher, $146.91
Right.
And we've seen it trade where between $122 and $163 over the past year, so quite a range. What jumps out at you there?
Well, what's kind of notable is how close that recent price, the $145, is to that specific fair value estimate you mentioned, the $144 one. It suggests, the market might be seeing the stock as, well, reasonably priced right now, based on that info.
Okay.
Now, you also mentioned the market cap, $40.43 billion, and the enterprise value, much higher at $51.18 billion. That difference points to the debt the company's carrying.
Right, always something to keep in mind.
Definitely.
So, looking ahead, the PE ratio, price to earnings, looking back is around 28.58. But the forward PE drops to about 24.
Yeah, 24.06.
So that implies analysts are expecting some earnings growth, right?
Exactly. That expectation, that future growth, it's kind of echoed in the average analyst price target. That sits quite a bit higher, around $169.40.
Okay, that's a bigger jump.
It is. But, it's worth saying that different firms see it differently. You've got Oppenheimer being pretty bullish at $185.
Wow.
Then Baird at $174, Piper Sandler more cautious at $150. And actually, one of the reports we looked at, when the stock was trading around $148, felt it was already at a premium.
Oh, interesting.
Yeah, they estimated fair value closer to $137. So definitely not everyone agrees on the immediate upside.
So yeah, kind of a mixed picture on the valuation front. Okay, let's switch gears. How's the company actually doing? Q1 2025 had some positives. An 8% rise in core operating profit.
Yep, and 5% system sales growth if you exclude currency fluctuations.
So what were the real standouts in that quarter?
Oh, definitely Taco Bell US. That was the star. Really strong. 9% increase in same-store sales.
9%, wow.
And a 16% jump in operating profit there. Huge. And KFC International also showed good momentum, accelerating same-store sales and notably 7% unit growth, expanding their footprint.
Okay, good signs there. And their digital side just keeps growing, doesn't it?
It really does. 12% year-over-year increase in Q1. And now digital makes up, 55% of their sales mix? Over half.
That's huge.
It's a key indicator, right?
Yeah.
Shows they're adapting to how people order food now. And it's not just happening by accident. It ties back to their tech investments.
Right, which brings us neatly to their competitive advantages. One report called it a wide economic moat. What's behind that rating?
Well, there are a few things. Their sheer size globally, obviously. The power of those big, iconic brands.
Sure, KFC, Taco Bell.
Exactly.
Yeah.
And their huge franchise network. That's the foundation. But what's really interesting, especially for their long-term moat, is that huge investment, over $1 billion in digital.
The AI platform, Byte by Yum.
That's the one, Byte by Yum. It's seen as a growing competitive edge, making things more efficient, improving the customer experience.
And this Byte by Yum thing, it sounds pretty central. Plus, they're partnering with NVIDIA to boost AI for things like voice ordering.
Absolutely. Voice automation, computer vision in the stores, restaurant intelligence. They're serious about using tech.
Seems like it.
And that, plus, new menu item, new concepts like Taco Bell's Live Mass Cafe or KFC's Quench concept, it all shows they're pushing to stay ahead.
But it's not all sunshine and roses, right? Pizza Hut US is still struggling.
Yeah, that's still a challenge. Same-store sales declined again in Q1. And the Habit Burger and Grill was kind of flat on system sales, negative on same-store sales too.
So that highlights the competition.
Intense competition, yeah.
Yeah.
Especially, in pizza and the fast casual burger space. It's tough out there. And there's plan for strategic closures.
Right. They mentioned closing some units.
Yeah, particularly in Turkey and some specific Pizza Hut markets. It shows they're trying to, trim the weaker spots and optimize the whole portfolio.
So actively managing the portfolio.
Okay.
What about their overall financial health? How are they looking?
Seems pretty stable. Their net leverage ended Q1 at 3.9 times earnings, right around their target of 4x.
Okay.
and their priorities seem clear. Keep investing in that tech, maintain a solid balance sheet, pay a competitive dividend. What is it, $2.05 annually now?
Yeah, they declared 0.71 cent for Q1 2025.
Right. And buying back shares, too. They repurchased about $228 million worth in Q1.
Okay, sounds like standard capital allocation for a big company. We also heard about a leadership change coming up.
Yeah, the current CEO, David Gibbs, is planning to retire in early 2026. But they've already started a year-long succession process. Try to make it smooth.
Good to plan ahead. So, finally, wrapping things up a bit, what are the potential risks listeners should maybe keep an eye on?
Well, a few things. Continued softness from U.S. consumers, maybe. That's always a risk.
Yeah.
The economy, exactly. Geopolitical stuff, global uncertainty, and just, execution risk. Can they actually turn around Pizza Hut U.S. and have a burger effectively? That's a key question. Oh, and tariffs. Apparently expected to be immaterial.
Okay, good to know on the tariff front. So just to quickly sum it up for everyone listening, Yum Brands shows resilience, strong engines in Taco Bell, KFC International. Tech investments look promising, potentially a big long-term advantage.
Right.
But challenges definitely remain with Pizza Hut US, Habit Burger. And the stock's valuation, well, it looks pretty full right now based on some analysis. Might be pricing in a lot of that good news already.
Exactly. So the key question for you to really think about is, do you believe those growth plans, that tech edge, will overcome the brand-specific challenges and justify where the stock is trading now?
Yeah.
That long-term impact of platforms like Byte by Yum, that could really be the deciding factor down the road.
A lot to weigh up. Well, we hope this deep dive gave you some valuable clarity on Yum brand stock. If you found this analysis helpful and you want more deep dives like this looking into the market,
Yeah, definitely subscribe.
please do subscribe to our YouTube channel
Yeah.
and hit that bell icon. That way you won't miss our latest updates and deep dives.
Thanks for tuning in.
Yeah, thanks for joining us.